Over time, whenever Cardano announces a new upgrade coming to its network, one brand that is consistently showing its undying support is Binance. Could this mean that Binance expects Cardano to blow up to $1,000? In this video, we're going to be looking at everything you need to know about Binance's relationship with Cardano and how it affects the future of ADA. Hey guys, welcome back to Investing Guide. If you're new here and you never want to be behind on the activities in the crypto market, then make sure you subscribe to the channel and turn on post notifications for more videos in the future. With that out of the way, let's get into today's video. Unless you're a crypto newbie, you may have most likely heard of or even used Binance. Binance is one of the biggest crypto exchanges in the world by trading volume. Since its inception in 2017, Binance has grown to offer crypto-to-crypto trading in more than 500 cryptocurrencies and digital tokens. The Binance platform has built its influence by offering one of the lowest transaction fees for cryptocurrency exchanges. The platform has high liquidity and offers discounts to investors that decide to pay in the native token of the platform, BNB. The company has launched two cryptocurrencies, Binance Coin, BNB, and Binance Smart Chain. Both of these tokens will be relevant to today's conversation. While Binance runs its own coin and is consistently making efforts to ensure that its value blooms, it has also been in support of everything that Cardano does. This, however, does not come as a surprise, considering that the Cardano network continues to bring updates that excite investors. While Cardano's blockchain is still very much in development, the coin runners have created a roadmap that keeps the industry wide-eyed about what to expect with each coming upgrade. Unlike what you would find with the more popular blockchains, the developers of Cardano are tackling their upgrades in a very modular manner, keeping the pathway clear for other things. Another interesting fact about the upgrades that Cardano makes is that although each stage is divided into eras, the developers are working on all of them at the same time. This simply means that the eras are more on a development track than just a fixed timeline. The first stage of the Cardano upgrade path was the Byron era. This era produced the primary framework that runs the Cardano protocol. It also brought about the implementation of the basic functionality of the network that assures users of the stable running of the network and its technology. The next upgrade was the Shelley upgrade. At the time of this update, Cardano witnessed a significant jump in its price as it offered benefits that investors were very much interested in. The Shelley era came with a higher level of decentralization on the platform. The upgrade started by launching Cardano's mainnet, and with that set, the Cardano ecosystem became reliant on community-run nodes. The era also promised and delivered on the introduction of delegation and incentivization schemes. The era that followed Shelley was the Gogoen era. With two eras still yet to come, the Gogoen era was one of the most anticipated, simply because it would bring smart contracts to the Cardano network. With all the updates in the Gogoen era, users will now be able to create decentralized apps on the network with its smart contract development language, Plutus. The other eras yet to be implemented are the Basho and Voltaire eras. However, every time Cardano announces the implementation date for any of their upgrades, Binance shows their support, and the price for the Cardano token, ADA, experiences a very impressive jump in price. In August 2021, Cardano set a new all-time high, jumping by 20% within 24 hours. This set its price at $2.55. The price also carried ADA into the position of the third largest cryptocurrency in the world, with a market cap of $80 billion. With this price jump and massive market cap, ADA exceeded Binance Coin and is now just behind Bitcoin and Ethereum in third place. Most experts believe that the explosive run was a result of the Alonzo Purple public testnet launch. This is the final phase of the Gogoen era that will allow the Cardano network to provide all the impressive features that smart contracts offer. With that being said, it is no surprise that Binance is always lauding Cardano for all the progress it is making with its upgrades. However, there's more. According to a recent announcement, Cardano holders will soon be able to access liquidity mining on the Venus protocol. Why is this useful to the conversation? The answer to that is simple. The Venus protocol runs on the Binance Smart Chain. Venus has continued to grow at the speed of light since its launch in November of last year. In 4 months, the team claimed it had secured up to 18,000 users and about $2 billion of total value locked. This is one of the highest in the Binance Smart Chain ecosystem. According to CoinMarketCap, Venus has the highest 24-hour volume of a decentralized exchange, despite being run on the Binance Smart Chain. When gas fees are considered, Binance Smart Chain is almost always the preferred option. BSC offers much cheaper fees for token swaps than other platforms like Ethereum, which is infamous for its outrageous gas fees. In its 2021 roadmap, Venus announced that it will be adding Cardano ADA to its platform. What this means is that investors that have ADA can now use it as collateral for borrowing and lending. With Cardano scaling higher and higher up the table, getting into the top 3 largest cryptocurrencies in the world by market cap, it's now joined the biggest players in the Venus protocol. Other tokens listed in the Venus protocol include Ethereum ETH, Bitcoin BTC, Bitcoin Cash BCH, Binance Coin BNB, Ripple XRP, Chainlink LINK, and more. Interestingly, the Cardano developers are now looking to start up a lending and liquidity provision protocol that they are calling Liquid Finance. While we might not have all the nitty-gritty details about how Liquid Finance will run, here is what's been revealed so far. Liquid is still in its idea and white paper phase, and it was invented in the first quarter of 2020, at a time when the world was plagued by a global pandemic that shut down economies, and worse, 60% of the global debt was yielding less than 1%, and almost $16 trillion of global debt yielded negative rates. These two huge factors created the need for relentless money printing. With results like these, it is only natural that there will be a shift of capital into higher risk yield streams. On that note, decentralized finance systems have gradually grown to become the talk of the town in every finance conversation. The debt levels, known as total value, locked in the decentralized finance system grew from just hundreds of millions to about $12 billion between 2019 and 2020. The surge in decentralized finance is mostly connected to the fact that yields on these protocols are way higher than the yields gotten from traditional centralized finance. How is the DeFi protocol producing so much yield? The higher yield is a result of assumed higher risk levels, and the unmatched efficiency users get from smart contracts and decentralized autonomous organization technologies. These two factors, combined with other protocol incentives, allow the annual percentage yield to be consistently higher on decentralized protocols than on whatever centralized systems will be able to offer. All things considered, the DeFi total value locked growth rate is bound to continuously soar. We are currently living in a world with unprecedented global debt volumes and negative real yields. But there are also the sustained yields that decentralized finance offers, hence making it more appetizing for suppliers. So how does Cardano's Liquid Finance benefit from all of this? Well, that part is pretty much settled. As long as the smart contract technology of its protocol is able to offer users a percentage of efficiency and yield, however minor, all global debt will eventually move to Cardano's decentralized blockchains in the long run. Considering the global aggressive quest for 1% plus yielding debt products by macro investors, it is now the best time for the DeFi market to build on the lapses of centralized finance. With the development of Liquid Finance on Cardano's public blockchain network, there is also the advantage that it can scale large enough to meet global demand. In summary, everything that Cardano has in the works for its network shows great potential to explode the value and price of its token, ADA. One last thing to think about is the price trend. Every time Cardano announces a new upgrade to its network, the frenzy and excitement of this announcement gets people talking about the token, which in turn affects the price of the coin. In July 2020, when the Shelly upgrade was close to completion, Cardano ADA rallied and witnessed a 200% year-to-date jump in price during this period. It also continued to set new records for all-time highs. Fast forward to August 2021, when the Cardano network was implementing its Alonso upgrade. At that time, Cardano hit another all-time high of $2.58. What is more fascinating about this price point is that it all happened within 10 days, from August 10th to August 20th, 2021. ADA witnessed a price jump of just over 50%, going from $1.70 to $2.58. With all that's been said, we can now understand why Binance is consistently in support of ADA, and also how it also signals a potential hefty price jump in the future. Before we go, we should remind you that the decentralized nature of cryptocurrencies makes them extremely volatile. What this means is that the fulfillment of these predictions hangs on a lot of factors. With that in mind, be sure that you are well informed about whatever investments you make and do not invest more money than you can part with. With that, we've come to the end of this video. Don't forget to subscribe to the channel and turn on post notifications for more videos in the future. While you're here, go ahead and click on one of these two videos on your screen. See you there.